Welcome to Personal Finance Channel. In today's video, we will review 5 high-yield dividend stocks worth buying in 2023. So, before we start, please like and subscribe to our channel for weekly updates. High-yield dividend stocks are stocks that pay out a higher dividend, or distribution of a company's profits to its shareholders, compared to other stocks. These stocks can be a good option for investors who are looking for a steady stream of income in addition to potential capital appreciation. When considering high-yield dividend stocks, it's important to carefully evaluate the company's financial health and prospects for future growth. A high dividend yield may be a sign that the company is struggling and is using its dividend to attract investors. It's also important to consider the company's payout ratio, which is the percentage of its profits that it is paying out as dividends. A high payout ratio may be unsustainable in the long term and could put the company at risk of cutting or suspending its dividend. Another factor to consider is the stability and growth of the company's dividend. It's generally considered more reliable to invest in companies with a track record of consistently increasing their dividends over time, as this can indicate a strong financial position. Here are 5 of our top picks. Number 1, AT&T, NYSE, T. AT&T is a diversified telecommunications company whose services are deemed essential, making it a relatively low-risk stock for income investors. Notably, AT&T stock has a low beta of 0.39, making it less volatile than the broader market. AT&T has a solid dividend payment history, and its ex-dividend date, investors need to own the stock before this date to become eligible for payouts, is January 9. AT&T stock offers a high yield of 6.06%, forward yield. Number 2, Verizon Communications, NYSE, VZ. Verizon is a diversified telecommunications conglomerate. The company is famous for its dividend payments. Verizon has increased its dividend for 16 consecutive years, the longest in the U.S. telecom industry. Moreover, it has paid about $5.4 billion in dividends in the first half of 2022. Verizon has an ex-dividend date of January 9. Further, it offers a lucrative dividend yield of 6.7%. Number 3. Eagle Point Credit Company, NYSE, ECC. Eagle Point Credit is a management investment company. It invests in equity and junior debt tranches of collateralized loan obligations to generate high income and capital appreciation. The company recently announced a special dividend of 50 cents per share, its second special dividend announcement in 2022, which reflects the strength of its cash flows. ECC has an ex-dividend date of January 10. Moreover, it offers a high yield of 14.86%. Number 4. Bank of Montreal. At a 4.5% dividend yield, there are higher-yielding dividend stocks on the TSX than Bank of Montreal, TSX, BMO. However, not many of those can match the $85 billion bank's dividend payout streak. BMO has been paying a dividend to its shareholders for close to 200 consecutive years. Passive income investors cannot go wrong with owning any of the big 5. BMO may not be the highest yielding among them, but it can provide as dependable a passive income stream as you'll find on the TSX. Number 5. Fortis. If you're in search of dependability, a utility stock should be top of mind. Reliable revenue streams are one reason why volatility often tends to remain relatively low for utility companies. At a $25 billion market cap, Fortis, TSX-FTS, is a Canadian leading electric and gas utility provider. The company also boasts a growing presence in the U.S. While growth certainly isn't the main reason to own this dividend stock, Fortis is no stranger to delivering market-beating gains. Including the company's current 4% dividend yield, shares have outperformed the Canadian market's returns this year. The dividend stock has also outperformed the Canadian market over the past 5 and 10-year periods when factoring in dividends.